Hello, and welcome to our latest video chat in the Money Show Expert Interview Series. I'm Mike Larson, Editor-in-Chief at Money Show, and today I have the pleasure of speaking with Mish, Director of Trading Education and Research at MarketGauge.com. Mish, thanks for taking time out to chat with me today.
So nice to meet you, Mike, and such a pleasure to be going to the show next week.
Yeah, I am super excited, absolutely. Well, why don't we talk a little bit, or start with you explaining a little bit about what it is you do at Market Gauge for those who may not be familiar with your work and your long history in this market.
Well, yeah, just to be very brief about it, I started out on the floor of the Commodities Exchange in New York, and I eventually made my way around to trade pretty much every commodity in New York, as well as in Chicago. And then in the 90s, when things shifted away from commodities, I got involved with equities. And then in 2009, actually, even though Market Gauge had been around for a while, I joined Market Gauge because there was a real need for financial education. And also people were looking to have somebody who can give them stock picks and strategy. And so that's what the niche was that I filled for Market Gauge. And I did a service for them for 14 years as a discretionary trading service. But I have now actually retired from that in essence, because since then, since I started, Market Gauge has created multiple quant models, blends, many tools, many different courses. And it seems the new education for me is to tell people what to look at that we offer when, according to whatever the market condition is. And on top of that, I do a lot of media appearances. I have been so honored to be at the Money Show several times through the years. And I write a daily content. So yeah, I'm kind of all over the place.
Got it. Well, let's maybe start from the top a little bit and say, in this kind of market environment, I mean, what does a trader really need to know or be successful? Like, what advice are you sharing with your subscribers and readers at this point?
Well, it's really good to have some kind of idea of the macro picture. And what I think a lot of people forget, particularly in the U.S., is that the macro picture is not just U.S. centric. There's a whole world out there. And as we're going through sort of a deglobalization, it's creating other issues that we hadn't seen before, number one. Number two is we're in a post-COVID world, which means everything has changed. So the old square peg, round hole, definitions have changed, relationships have changed. And so as a result, from the years of commodities trading, one thing you learn is you go with the momentum, you adapt to the actual time frame condition of what the macro is telling you. In this case, it's very trading range oriented. And you really always have to know your risk and be able to take a profit when you're making money, but keep a tail when things are going your way. It sounds simple, but really it takes a lot of work and education to get there.
Great. You know, it's funny. I read one of your recent commentaries, and I got a kick out of how you described the current environment. I think you called it a Picasso Cubist painting. I was wondering if you could explain to our viewers, you know, what you said or why you said that and what you meant by that when describing this environment.
Oh, thank you for reading that. Yeah, well, if you think about the Picasso Cubist period, it was a way to take the human shape and change things up so that the eye was up here and the nose was down here and the mouth was over here. And even though it was recognizable as a whole face, essentially what that period was doing was forcing people to look at things that they see in an ordinary fashion, in an extraordinary fashion, for a different perspective. And that is exactly, I think, the perfect metaphor for what we're seeing right now, right? In the market, the relationships are all over the place. And you have people really trying to stay in a box and having trouble in that box because the eye's over here and the nose is down here. So if you have that going in, it gives you a lot more flexibility.
Got it. Well, you know, one of the big issues obviously has been inflation and how the Fed, you know, is going to react to that and how the policy outlook is evolving. So there was an interview, you said that you thought this is a little bit tougher for the Fed because they're fighting a global inflation problem, not something that's just U.S. centric. Can you talk a little bit about that and what that implications are for markets?
Well, when I came to the Money Show in October, my whole talk was about looking for inflation in all the wrong places. And back in October, of course, we know we had the nadir in the whole market and in a lot of the commodities. So it looked really smart back then to be buyers of gold and copper and silver and grains and oil. So now here we are. And of course, there's a lot of talk about deflation, disinflation, that the Fed, in essence, has been able to control things. Supply chain is back, consumers are impacted, et cetera, et cetera. But exactly what the question is that is once again very U.S. centric. in that global inflation is still an issue. Geopolitics are still an issue. And even though we've had aspects of inflation come down, if you're looking at things like housing prices or used car prices, we still have a situation where there is what they call sticky inflation here, and then globally much worse. There are food shortages going on. And that's really where I've been focused, with oil more of an X factor. But then you also have the dollar and the buzz about that. So I think you have to really look outside. And that's different than the last inflation we had in the late 70s, which was a few countries. But now it is much more insidious throughout the globe.
Right. Well, in this environment, and obviously technical analysis and everything factors a lot into the work you do. Are there any asset classes or markets that you look particularly bullish at this point? And on the flip side of that, anything that looks particularly bearish right now?
Well, that's another paradox in our Picasso painting, right? So we've had sectors like semiconductors and some of the growth stocks doing very well with the AI buzz. I do believe perhaps that we've gotten a little bit too fast, too far in the AI buzz. Not that I think AI is not a thing, it is. But, typical of mass herd mentality, everybody jumps in thinking that there'll never be another opportunity. But that still looks good. I think some of the defense sectors look really good. If you look at Raytheon and Lockheed Martin, which reported that is doing well. And I also really, really like the commodity space. I have not taken my eyes. Gold is trading over 2,000 an ounce. Silver is hovering about $25. Copper has gone up. Some of the softs, coffee, sugar continue to be very elevated. And so I've been a dip buyer really in that I think at some point those commodities will take a second leg up. And equities may have a little bit more trouble, including even in the AI, which eventually may be another great buy opportunity. But again, market timing's everything, right?
Yeah, absolutely. Well, before we wrap up here, I was just wondering, for the viewers here, could you give us maybe a sneak peek at what you think you're going to be talking about in Las Vegas at the Money Show coming up?
Well, I hope at this point I know more than think.
You never know. Sometimes you got to wait to ingest that very last bit of market information. Trust me.
No, that's true. And I think there's an element of that. But I like to be very prepared. And I think probably the biggest thing on the heels of what I talked about in October is this trading range. But I want to define it because people say trading range and they don't give people parameters. So what's so interesting is this 2-year business cycle, 23-month moving average, which means we step back a little. And what's happened with this 23-month moving average is it reflects 2021, bullish year, 2022, bearish year. This year, I like to joke and say it's the WTF year. Nobody really knows. So this 23-month has been a really good demarcation in that everything has rallied to it in terms of equities. Some have gone over like semiconductors, but most are staying confined there, while commodities went through it already and have come back to retrace it. So what it's telling you is in a 2-year business cycle, we have equities not quite showing any great expansion, commodities with a retracement showing more potential expansion. And if you put a line on it like that, we're going to look at a lot of different instruments to see where they are within that cycle.
Got it. Well, Mish, thank you so much for your insights here today, and thank you to all of you for watching. I hope you enjoyed this interview. If you did, you're going to love seeing experts like Mish in person. The upcoming Money Show Traders Expo is right around the corner in Las Vegas. We're going to be bringing together more than 100 experts, more than 100 presentations, keynotes, panel discussions, social events, you name it. So click the link in the video description below if you want to learn more about how you can join us at the all-new venue for 2023, Paris, Las Vegas. Thanks again for your time.